I think that there is no foregone conclusion on inflation. The
Yeah.
drivers of inflation, those long-term drivers of inflation that kept it low and basically asleep for almost 20 years before this big upending of the pandemic, are not in place any longer. So you're talking about demographics, globalization, those used to suppress inflation. Now they're a tailwind to inflation. And so, no, nothing is pre-committed, not even the Fed. And so, yeah, when we see a little uptick in PPI, like we saw today, a bit of an uptick in CPI, we have to be a little wary of what direction this is going to go over the long term.
Talk to us about the labor market, Nela. I mean, nobody has a better view to the labor market than the good folks at ADP.
She signs my paycheck.
I think exactly. Yeah, exactly.
It's like the dollar. Nela Richardson
signs the paycheck. Nela, how would you characterize this U.S. labor market these days?
I think it's okay. If I were to grade it, I'd grade it a B minus. I think it's pretty good. We've seen unemployment stay relatively low, under 4.5% is low unemployment if you look at historical levels. But we're seeing less dynamism than we've actually have experienced in the past. People are staying put longer in the job. The U.S. labor market is characterized historically by this really dynamic churn. And we're not seeing the churn now. People are playing it safe, right. Both employees. And that does worry me a bit. Also, the concentration of hiring has been really segmented in a couple of service providing industries like leisure and hospitality. And finally, manufacturing is just shedding jobs.